online.
Good evening, I'm Jim Lara. On the NewsHour tonight, the news of this Thursday, led again by the financial crisis as the stock market had another huge fall, with additional looks at the economic ripple effects on retirees and on the high-tech world of Silicon Valley. Then a campaign roundup with McCain in Wisconsin, Obama in Ohio, and an update of the worries about the war in Afghanistan.
Major funding for the NewsHour with Jim Lehrer is provided by
oil, energy, the environment. Where are the answers? This isn't a liberal or conservative issue. It's a human issue. As an energy company, Chevron has a great responsibility. So we've improved our own energy efficiency 27% since 1992. And now we ask you to join us in one of the most important efforts of our time. Using less. Will you join us? Chevron, human energy.
Pacific Life, Vestas,
the William and Flora Hewlett Foundation, working to solve social and environmental problems at home and around the world.
and with the ongoing support of these institutions and foundations. And
this program was made possible by the Corporation for Public Broadcasting and by contributions to your PBS station from viewers like you. Thank you.
Rising fears of global recession pushed Wall Street into a new free fall today. The Dow Jones Industrial Average plunged below 9,000, exactly 1 year since hitting an all-time high above 14,000. The rout accelerated late in the day as General Motors faced a possible cut in its bond rating. When it was over, the Dow had fallen nearly 679 points to close at 85.79. The NASDAQ fell 95 points to close at 1645. As the losses mounted, a top analyst at one firm said, "We're way beyond fundamentals. This is just pure panic. That's all it is." And stocks around the world also retreated. Major indexes in Europe were off another 1 to 2%. Asian markets were mixed. The worldwide sell-off continued despite talk of more government action to end the crisis of confidence. The New York Times reported the U.S. Treasury may buy stakes in major banks under the financial rescue plan. It said the goal is to quickly strengthen banks' balance sheets and persuade them to resume lending. Britain announced a similar plan yesterday, and today White House Press Secretary Dana Perino confirmed the idea is under consideration here.
It was a part of the rescue package that the President supported, and it gives the Treasury Secretary a range of possibilities, and investing in banks directly was one of those authorities, and Secretary Paulson can use that authority as he sees fit.
White House officials also announced the President will meet with finance ministers of the world's economic powers this weekend. The group of 7 nations will gather in Washington under mounting pressure to take strong steps. In London today, British Prime Minister Brown said they understand the need to act.
I've been talking to President Bush, I've been talking to European leaders. We'll have a world leaders meeting very soon, I think. We're going to have to get agreement on basic principles that underline a banking system. So what happens in America can no longer infect, because something has gone wrong there, what's happening in Britain.
World Bank President Robert Zoellick urged coordinated action as well, and he said wealthy nations must come to the aid of others. He warned that 28 weaker countries are slipping toward the edge, facing growing poverty and hunger.
The poorest cannot be asked to pay the biggest price. For the poor, the cost of crisis can be lifelong. Children suffer the long-term consequences from short-term economic shocks, and many never fully recover.
The situation in Iceland also took a new turn for the worse today. The government seized control of the country's largest bank and halted trading in stocks. The Prime Minister appealed for calm as he tries to stave off national bankruptcy. We'll have more on the financial crisis right after this news summary. The price of oil hit its lowest point in a year today. It finished near $86.50 a barrel in New York after trading below $85 at one point. The slide continued even though the OPEC cartel announced it will meet in November to consider cutting output. In the U.S. presidential campaign today, Democrat Barack Obama targeted Republican John McCain over his plan to buy up bad mortgages. In Dayton, Ohio, Obama said McCain's strategy punishes taxpayers, rewards banks, and won't solve our housing crisis. McCain's campaign fired back that Obama won't spend a dime to help hardworking Americans stay in their homes. We'll have more on the campaign later in the program tonight. There was word today U.S. policy in Afghanistan is under urgent review amid warnings of a downward spiral. It was widely reported a national intelligence estimate warns the situation is rapidly getting worse. The reports raised doubts about American strategy and the Afghan government's ability to cope. In Hungary, Defense Secretary Gates discussed the Afghan war with NATO allies. He called for a new effort against the Afghan opium trade that funds the Taliban.
I don't think anyone in the alliance is interested in eradicating crops or doing things that involve individual farmers, but if we have the opportunity to go after drug lords and drug laboratories and try and interrupt this flow of cash to the Taliban, that seems to me like a legitimate security endeavor.
The Afghan government joined the call for action against drug lords, but Gates said many NATO nations have balked at using their troops in that fashion. We'll have more on Afghanistan later in the program. A roadside bombing in Iraq today killed a top Shiite member of parliament. It raised fears of a new wave of political murders ahead of upcoming elections. The U.S. military warned Iran might use assassinations to influence the outcome. U.S. Army Major General Michael Oates said that is flatly the way some people deal with their political problems here, by eliminating their opponents. North Korea took another step closer today to restarting its nuclear weapons work. The government formally barred UN inspectors from all of the main North Korean nuclear sites. That could clear the way to reactivate equipment there. Also today, a South Korean newspaper reported North Korea moved 10 missiles to an offshore island. In Washington, the State Department urged North Korea to avoid raising tensions. The Nobel Prize for Literature was awarded today to a Frenchman, Jean-Marie Leclésio. He's considered one of France's greatest living writers, and he was honored for his novels, children's books, and essays. The committee called him a nomad and praised his writing about exotic places, lost cultures, and ecology. And that's it for the news summary tonight. Now, the economic crisis for banks, for retirees, and for Silicon Valley. Today in the presidential campaign, and the bad news in Afghanistan. The latest on the financial crisis, Jeffrey Brown begins.
Until mid-afternoon, it looked like a relatively calmer day on the stock market, and then yet another dramatic drop took the Dow down sharply. And there was talk of yet another major government move, with the Treasury Department considering a direct investment in banks. We look at the latest developments now with William Poole, former president of the Federal Reserve Bank in St. Louis. He's now a senior fellow at the Cato Institute. Hugh Johnson, chairman and chief investment officer at Johnson Illington Advisors, and Krishna Guha, the U.S. economics editor for the Financial Times. Well, Hugh Johnson, can you tell exactly what happened this afternoon to bring on the drop? It dropped from about 3 to 4 o'clock today, about 400 points. What happened?
Well, we had bad news on General Motors, but I think really what it is that you have a lot of sort of institutional investors as well as individuals that are sort of prepared to sell, or they have it in their mind that they're going to sell. They're kind of hopeful that the stock market's going to rally and they can postpone their selling. But when the stock market doesn't rally, as it didn't do by 2 o'clock, they kind of throw the towel in, if you may, and start to do their selling. There's some institutions, such as mutual funds, where they're faced with redemptions from their shareholders. That is, their shareholders want their money back, and they have no choice. And by the end of the day, they have to sell. So come 2 o'clock, they start to sell, and that's why it picks up in the latter part of the day. The sellers have to get out.
Krishna Guha, what would you add to that? Who is selling, and why so fast?
Well, as your previous guest said, one of the factors causing this is redemptions out of stock market investment funds. But I think there's a wider point here, which is any given amount of selling now is producing dramatic falls in the stock market. And there's a simple reason for that. There's just very little buying interest out there. There's very little interest from end investors. But also, the securities firms that normally act as so-called market makers, that's to say they offer to buy and to sell prices with a spread, stocks with a spread between those two prices. Those banks aren't doing the job that they used to do. They don't want to put their capital at risk to the same extent, and they're scared by the extraordinary volatility that bounces up and down in stock prices.
Mr. Poole, the day started with reports about the Treasury, this idea of the Treasury making direct investments in banks. How would that work? I realize it's not finalized yet, but why would they be taking that action, and how might it work?
Well, the fundamental problem we face in the banking system is that people don't know whether their banks are truly solvent or not because of all the uncertainty over what their assets are worth. And that means the banks are uncertain about each other as well. What we need is for the banks to become unquestionably solid. Nobody has any concern about lending money to Berkshire Hathaway or Microsoft. Those companies are very, very well capitalized, and we need to put our commercial banks in the same boat, the same situation.
But to stay with you, this kind of direct involvement by the government in the private sector banking system is quite a philosophical turn, isn't it, in our market system?
Yes, it is, but I think it's necessary. I think the idea would be, certainly from my perspective, from a libertarian perspective, we want to keep the fundamentals of the economy in place, and if the government can put capital in for a period of time and withdraw it later when the economy has become prosperous again, then we will have gotten out of this pretty cheaply.
Krishna, you've been talking to people at the Treasury today. Any word on how it might work? Would it be voluntary, for example, for banks?
The assumption at this point is that it would be a voluntary plan, so it wouldn't be identical to the plan, for instance, announced in Great Britain this week, where they essentially are requiring the biggest banks to either raise more capital from the markets or go to the government and get government capital.
And why would we do it a different way? Why would we make it voluntary?
Well, I think there are a couple of reasons here. The first is that the US authorities don't want to take the extreme measure of the government instructing privately owned companies, financial banks here, what they have to do, particularly the healthier ones, ordering them what to do seems a stretch, even at this juncture. The second point is that the US financial system involves many more important firms, a much larger number of different banks and other financial firms, some of which aren't even regulated as banks. So this is a more complicated system. It may need more case-by-case treatment, and the government prefers a voluntary approach here.
Hugh Johnson, this plan was out there this morning when the markets opened. What do you make of the plan, or what do you hear about it in terms of its ability to turn things around?
Well, it creates a little bit of concern. You know, the private sector obviously is never really likes the public sector getting involved in the private sector, or even if it's just injection of capital, but taking a position. That's something just short of nationalizing the commercial banking industry. So I think that investors generally feel very, very uncomfortable with this move. At the same time, as has been sort of stated, if it's a plan to somewhat nationalize, partially nationalize the banks, buy stock in the major commercial banking companies, and then eventually to denationalize or to sell that interest, I think that would go down fine, particularly if it adds enough capital to start the lending process again. Remember, what this is all about is there's deep concern that the lending process is not really working, or that companies are not able to borrow money in order to do things like meet their payrolls, pay their bills, and finance their inventory. So if that helps to do that, that will start to build or rebuild confidence in the economy, confidence in our credit mechanism, and if that happens, the stock market will stabilize. And so if it gets that result, it'll be just fine, it'll do what it is, but we've got to denationalize if we do nationalize to some extent.
Mr. Poole, we've been talking all week about various dramatic moves and then the possible counterintuitive results. I wonder, in this kind of a plan, is there a potential problem that banks that might choose to participate would be showing themselves to be unstable and therefore get in worse trouble?
Well, given that the plan in the United States presumably would be voluntary, and I must say the word nationalization is a bit scary and maybe scarier than it should be, because if it's voluntary, it's not as if the government is seizing the banks in any way. It's putting money in, making it a voluntary investment. And I think the issue there is that a bank that gets into this, that wants the government money, ought to do other things, such as raising private money at the same time, so that it comes out with the capital infusion, leaving it with unquestioned and unquestionable strength. That strategy should leave the bank better off and dispel potential concerns that a bank is seeking government aid out of weakness.
Now, Krishna, we just heard a report that President Bush is going to speak tomorrow morning, I think before the markets open. Every day there's a different action by the government that so far hasn't had the intended results. Is there starting to be a fear of, is there a potential of the government running out of ammunition in a sense?
Well, there is a real concern among policymakers that they've taken some very big steps in recent days. I mean, let's not forget, it was only on Wednesday that we got an international interest rate cut. It was only a day or so before that the Federal Reserve said it would buy short-term IOUs from companies.
And less than a week since the federal government with the big Treasury bailout package.
So extreme steps taken, very little response from the markets, and immediate craving for the next big fix, the next government intervention. That does worry people. Now, it's my understanding at this juncture that President Bush is not intending to make a major announcement in his address tomorrow morning. But of course the situation is fast evolving, so no one can be 100% certain. What the president is likely to do, rather, is to try to explain to the American people that the government is on the case, that it is pursuing a number of strategies that will together contain this credit crisis and make sure we don't have a disastrous economic outcome.
And Hugh Johnson, what is your sense of the government's ability to step in and shape the markets and I guess at some point hope that we reach a bottom?
Well, history tells us that they have to perform what they're doing now, which is adding money or liquidity to the system. And if it doesn't work, if the credit mechanism doesn't start to work again, if confidence isn't restored, then they simply have to do it again and again and again until confidence is restored. So, quite frankly, they have no choice but to continue on this course that they're on. They've been very creative. They've been very aggressive, and I'm hopeful that at some point we'll see the markets stabilize and confidence return. There are actually, despite all of this sort of dark cloud, some silver linings here, because it's rare that you see this level of pessimism coupled with what might arguably be a cheap level for equities, as well as some, race for the exits type panic selling. When you see that, that's more characteristic or symptomatic of the later stages of a decline in stock prices, not the early or the mid stages.
And Mr. Poole, a brief last word from you. You've been at the Fed. Where are you now? What are you thinking?
Well, I want to emphasize a point that we must not lose sight of. With all of this turmoil, the underlying productivity of the economy has not been affected. The skills of our labor force, our capital stock is all there, our factory buildings, our transportation system, all of that is intact. And when we can get the financial system straightened out, the mess cleared up, then the inherent productivity of the U.S. economy will show itself again and growth will resume. A lot of gloom out there, but there are market processes at work as well as the government steps that are going to get us out of this. I don't know when, but it will happen.
All right, happy to end on an upbeat note tonight. William Poole and Hugh Johnson and Krishna Gupta, thank you. Now we do gauge some of the fallout that is already happening from the financial turmoil. We look at the impact on retirement savings and the federal budget with Peter Orszag, Director of the Congressional Budget Office. Welcome to you.
Thank you.
Now,
Nice to
we
be
just
here.
heard that some potential good, and I think we're all hoping for that, but you've been looking at the impact already on retirement savings, something that everybody is concerned about. Can you make a general statement about what the impact's been so far?
Sure, and retirement assets are one of the myriad ways in which financial market turmoil is going to affect households. Looking specifically at that, since the beginning of, since the middle of last year, retirement assets, public sector, private sector, defined benefit, defined contribution, altogether, have declined by about $2 trillion, or about 20%.
$2 trillion.
Yes.
Now, there's different kinds of pension plans, so break it down a little bit. Defined contribution, that would be the 401ks that people are familiar with.
Right.
Now, do we know, are most of those in stocks or the majority? How does that work?
Something like 2/3 of the assets that are in 401k plans are in stocks. And actually, one problem is that too many workers are overinvested in a single stock, like their own employer stock, which is not a wise investment strategy.
Not sufficiently diversified.
Not sufficiently diversified, yes. But even for those who are diversified, they suffer when, if you're in a diversified stock fund, when the stock market goes down, your retirement assets decline.
Another kind is the defined benefit plan, right? This
Correct.
is company. Explain the difference and what's happening to those plans.
Sure. In a defined benefit plan, the company owes you something in retirement, $10,000 a year. And if there's not enough money there, they need to make up for it. So what will happen now, given that the assets in those plans have declined, is the companies need to put in more money, and that will come out of either their shareholders, their workers, or they'll try to pass it along to their consumers.
So companies are hurting because of the economy, because everything we've just been talking about, but they still have to put money into these pension plans.
That's correct. They're given some time. They can spread it out over time, but they will have to make up the difference.
And what about public plans?
Public plans have also suffered something like more than a $300 billion decline, and their state and local governments will have to make up the difference, again, based on, it'll be borne by either state and local government workers or taxpayers.
Now, the practical impact of this is the potential that people will have to look at working longer.
Well,
sure. Go ahead.
I was just going to, basically, if you have, say, a 401k plan and it goes down, you only have 3 choices. You can save more now to try to make up for it. You can spend less once you're retired, or you can work longer. Those are the 3 choices.
What has been the trend?
The trend in retirement age has been a decline through the 1970s and 80s, and then it's reversed a little bit, so that we are now a little bit working longer, and that may well be reinforced by the decline in the stock market.
I want you to put on your other hat now, which is the budget watcher. Is there any question at this point that the budget deficit will be much larger than one we had thought?
There's no question the budget deficit is going up. It was increasing even before the most recent turmoil. If you add the potential for a significant recession and the operations of the federal government in trying to stave off the financial turmoil, we could be seeing a deficit this year of $750 billion or more.
Compared to what? What was your most recent?
Last year it was a little under $450 billion.
And give us some perspective.
Sure.
I mean, I know in the past we always talk about this vis-a-vis GNP,
yeah.
Right? So when is it scary and when is it not scary?
$750 billion would be about 5.5% of the economy. That's a big number. It's not the largest ever, but it's a big number.
What are the variables? I mean, we're talking every night about the potential plans in which the government gets itself involved, right? Mm-hmm. So I know there's a lot of variables out there about what could happen or what the government could be the taxpayers could be on the hook for. When you think about the budget implications, what are the main variables that you're thinking about?
Well, for example, the announcement that the Treasury Department is now focusing on injecting equity into banks rather than just buying, rather than just buying assets, could change the numbers a lot. If we buy an asset at a fair price, if we buy something for $1 and it's worth $1, there's no net impact on the budget. If we instead inject capital into a bank, there may well be a more substantial effect. So it will depend on what we wind up doing, and we still don't know exactly what we're going to do.
Now, then the next, of course, major question is what kind of impact would these kind of deficits have on government spending?
Well, even before this, we were on an unsustainable fiscal course. And, one thing we need to remember is we're lucky that we have the maneuvering room now to issue lots of additional Treasury securities and intervene aggressively to address this crisis.
Wait a minute, explain that. Lucky in what sense? That we just have the money available?
That people are still willing to lend to us. Mm-hmm. If in 20 or 30 years we continue on the same path with rising healthcare costs and rising budget deficits, we would reach a point where we wouldn't even have that ability. And so if another crisis like this one hits, we would then not have the maneuvering room that we currently have to address it in a prompt way.
But even in the next year, say, when you look at various things that are talked about, the healthcare system, for one, that's one you've studied a lot. there are implications for any possible reforms or programs that anybody might want to implement.
I think it's going to be very likely that early next year and into much of next year, most of the economic policy discussion will be surrounding the financial markets, and so it's going to be hard to get other topics on the agenda, not just for fiscal reasons, but also just because we're all human beings and there's a limited amount of time and attention that can be given to different topics.
We've heard the candidates asked about this, and my colleagues Jim and Gwen have both asked them in the debates they moderated about the implications. You're saying there's no doubt that whoever takes office, they'll have to deal with this.
We had to deal with it. We have to deal with our long-term fiscal problems. We had to deal with them before this financial crisis occurred, all the more so as we emerge from the crisis. We better get our hands around the fiscal course that we're on again, primarily because if we don't, we're going to wind up with a crisis that's even worse than today's, and we won't have the ability to address it in any sensible way.
And as we were just talking about, there could be more to come in terms of government rescue type plans, right?
There could well be more to come.
All right, Peter Orszag, thank you very much.
Thanks for having me.
And to the impact of the crisis on venture capitalism in Silicon Valley. NewsHour correspondent Spencer Michaels reports.
22 stories above San Francisco Bay, in a conference room of the venture capital firm Crosslink, a software entrepreneur is pleading his case for financing in troubled times to a couple of the firm's partners.
And what are the milestones that you think you could achieve, and what time frame? How long will the $1.5 million last, and what are the milestones you could achieve?
Yeah. I would say the $1.5 million would last about, I'm going to be a little conservative because I always know that things don't quite work the way you expect them to, 9 months.
Ashok Narasimham's new venture, called Cinch, is an online service for businesses to reward customer loyalty. He has been through economic downturns before and survived. And he thinks he and Silicon Valley, which has been a major growth engine for the American economy, will survive the turmoil on Wall Street.
But the good news is that it doesn't translate into the doom and gloom scenario that is there in the general economy. That's my belief. But I'm not a venture capitalist. But from an entrepreneur's point of view, I'm not hitting the panic button.
While the venture capitalists Narasimhan is asking for money are being more careful than before, Peter Rip, a general partner, sees some bright spots for the tech sector.
It's the sector where the U.S. is still has an advantage on a worldwide basis. So in the short term, yes, everyone's boat is going down in the water, but ultimately the growth sectors tend to recover faster.
Still, Narasimhan, like many in Silicon Valley, fears some consequences, including a slowdown in business and a possible drying up of credit.
It's not that people are not going to invest. It's they're going to be more selective about where they invest. I've heard some guys kind of still in a paralysis mode. It'll probably take them another couple of weeks and 2 more partner meetings to figure out, where their heads are really at.
Venture capital, unlike bank credit, has not dried up, says Peter Rip, because it comes from wealthy individuals and large institutions like pension funds. The National Venture Capital Association reports only a small drop-off in venture investments last quarter. Even so, Rip predicts VC money will become scarce for older, mature companies.
Where we're looking for new investments is typically in very early stage companies that have a gestation period that will grow for many years and don't need revenue in 2009. By the time the recovery happens, they'll be intercepting a booming economy.
So what happens to the companies that aren't in that category, late stage companies that you probably don't want to invest in right now? What's going to happen?
They evaporate. It's a boom and bust cycle.
The concept that the gloomy economic news may not hit Silicon Valley hard is fairly widespread. Despite drops in high-tech stocks, that's still what many Valley spokesmen are saying publicly.
And I think they're delusional.
John Fisher, who has run 3 of his own startups, sees big trouble ahead. He now teaches business at the University of San Francisco.
I don't think Silicon Valley is insulated. I think fundamentally the way that Silicon Valley has traditionally made money in the form of selling stock to the public in an initial public offering or in the form of companies merging has changed due to a lack of access to capital. For example, in last quarter, there wasn't a single venture capital-led initial public offering.
Even with financing from venture capitalists, Fisher says Silicon Valley still depends on credit.
The life cycle of a startup company, credit in the form of debt financing to buy equipment, to sometimes meet payroll, whatever the circumstance may be, plays a critical role. All of these businesses, startup, venture capital, Silicon Valley alike, need access to credit to survive.
Still, Fisher's pessimism is the minority view among Silicon Valley entrepreneurs, whose optimism is legendary. Every 2 weeks at 8:30 a.m., a couple of dozen young high-tech CEOs, startup company founders gather in downtown San Francisco to exchange ideas and to listen to a speaker.
Hey, everyone.
This time it was Adeo Ressi, a veteran player in the high-tech world who operates the website The Funded.
The reality is it doesn't affect the startup world today that much. The economic meltdown is a result of banks over-leveraging their various equity positions. A lot of corrective measures have been put in place that won't allow that overheating to happen again.
Ressi sees the rest of the economy's troubles as a chance for new companies to make money.
There are tons and tons and tons of potential new business opportunities that were closed to startups, as little as 3 weeks ago. If you're in low-cost goods and services, you're seeing a spike in demand because people are looking to save money. So other companies are having difficulties for sure, but there are also opportunities in the market.
The young CEOs mostly agreed, but many of them have already seen changes. Faisal Qureshi is depending on angels, individuals who supply very early private money.
We were counting on an angel round of funding, and I had a couple of angels lined up, and just in the past couple of weeks, after they committed, they're sort of on the fence, and I think just because of the psychology of a lot of high net worth individuals, having seen a pretty big decline in their personal assets.
We need some money to push it to the next level, and that's the money that seems to be going away right now.
Still, to be an entrepreneur, you have to have confidence.
So you're talking to a bunch of people who are super optimistic that, in fact, even in an enormous economic downturn, that we're going to somehow make it to the other side.
I think if we can help promote that optimism, and if we can sort of spread the calm, we can actually make it possible for the entire market not to freak out as we're all going through this, because we're all in this together.
Despite that optimism, one new survey says confidence among venture capitalists is the lowest in 4 years. And while opinions diverge sharply on how hard Silicon Valley will be hit, most agree that some changes are coming to this dynamic sector of the American economy. When they will occur and how profound they will be are the topics of tabletop conversation throughout the valley.
Now on the presidential campaign today, as candidates continue to make their case in the battleground states. NewsHour correspondent Kwame Holman reports.
3.5 weeks before Election Day, the major presidential nominees are burning up the campaign trail and lighting up the airwaves, spending unprecedented millions on mostly TV advertising to saturate a handful of toss-up states. Barack Obama was in Ohio today, a state that went for George Bush 4 years ago. But recent polls there show Obama reversing a September slide, and he's now neck and neck with John McCain as the focus of the race has shifted to the economy.
If you've invested your life savings in the stock market, or if your pension has invested in the stock market, if you got a 401k, you've probably watched a good chunk of your savings disappear. It's now a 101k. It's not a 401k, it's a 101k.
Obama spoke in Dayton this morning, criticizing McCain's new proposal to stem the housing crisis through government buyouts of bad mortgages.
Senator McCain actually wants the government to pay the full face value of mortgages on the books, even though they're not worth that much anymore. So banks wouldn't take a loss. but taxpayers would take a loss. It's a plan that would guarantee that you, the American taxpayers, would lose by handing over $300 billion to underwrite the kind of greed and irresponsibility on Wall Street that got us into this mess.
Obama also ratcheted up his critique of McCain's temperament and tied it to the Republican nominee's plans to address the housing bust.
He's ended up with a plan that punishes taxpayers, rewards banks, and won't solve our housing crisis. But this is the kind of erratic behavior we've been seeing out of Senator McCain. You remember the first day of this crisis, he came out and said the economy was fundamentally sound. Then 2 hours later, he said we were in a crisis. I don't think we can afford that kind of erratic and uncertain leadership in these uncertain times.
400 miles away in Waukesha, Wisconsin, McCain and running mate Sarah Palin focused on the problems of the economy, but also on their problems with Obama. McCain defended his plan to help homeowners with troubled mortgages and the institutions that lent them money. He also pinned the blame for the recent economic tumult on the Democrats.
Senator Obama was happy to bail out Bear Stearns, AIG, Fannie Mae, Freddie Mac, his pals there, and the Democrats in Congress that refused to reform Freddie Mac and enact legislation to stop this crisis, but he's opposed to us helping the homeowners of America.
An audience member asked McCain why he wasn't making more of Obama's association with former 1960s radical William Ayers. Obama served with Ayers on a charitable foundation board in the 1990s.
We don't care about an old washed-up terrorist and his wife who still, released on September 11, 2001, said he still wanted to bomb more. That's not the point here. The point is, Senator Obama said he was just a guy in the neighborhood. We know that's not true. We need to know the full extent of the relationship because of whether Senator Obama is telling the truth to the American people or not. I'm mad. I'm really mad.
Several McCain supporters angrily criticized Obama and news outlets for failing to be tough enough on the Democratic candidate. Palin said she shared their frustration.
It's dangerous territory whenever I suggest that mainstream media perhaps isn't asking all the questions. You guys have to help us do that. And then one more thing. I know when my impatience through interviews or anything else shows, I know when that happens that some of you may think that I'm just trying to provide job security for Tina Fey. Well, no, it's because I am like you, and I wonder, too, when will the questions be asked and when will we get the answers?
Meanwhile, Democratic vice presidential nominee Joe Biden campaigned in swing state Missouri and gave his analysis of the McCain charges.
You know what they're going to try to do. They're going to take the lowest road to the highest office in the land and hope it works again for them. But that's exactly what they're doing now. And think about it. A recent survey shows that 100% of John McCain and Sarah Palin's ads, campaign's ads, 100% are negative. I guess when you vote with Bush 90% of the time, you have to go negative 100% of the time in order to make a point.
The rising number of on-the-stump attacks on each candidate's character has been mirrored over the airwaves, where the McCain and Obama campaigns combined to spend a record $28 million last week. 2/3 of that battleground state spending was by Obama, says Evan Tracy, head of the nonpartisan Campaign Media Analysis Group.
Right now, the majority of their spending is going into television advertising. It's touching about 15 states right now. And where you really see Barack Obama's financial advantage showing up is in these day-over-day media buys. His spending right now is eclipsing $3 million a day. Senator McCain's are slightly over $1 million. In a number of media markets, Senator Obama has a 4 and 5 to 1 advantage as far as spots on the air and dollars spent.
And Tracy says the campaigns are turning out ads nearly instantaneously, such as this one from Obama today, assailing McCain's new mortgage bailout plan.
McCain would shift the burden from lenders to taxpayers, guaranteeing a loss of taxpayer money. Who wins? the same lenders that caused the crisis in the first place. Putting bad actors ahead of taxpayers, we can't afford more of the same.
McCain's ads focus on taxes, which he claims would rise under Obama, and on Obama's character.
How extreme. But when pressed, how does he defend himself?
They're not telling the truth. I hate to say that people are lying, but here's a situation where folks are lying.
Mr. Obama, we all know the truth.
McCain has had to go a lot more negative for two reasons. One, he's trailing the polls, but the second reason is negative ads cut through better. People are more inclined to listen to negative ads. So right now, he's doing them both out of strategy and necessity. Senator Obama's been a little more positive, but don't be fooled into thinking that he's entirely positive.
And both campaigns are producing more web-based ads than in previous elections, hoping they'll be picked up by cable news, but also to supply what Tracy calls tomatoes for the food fight between committed partisans on both sides.
Barack Obama and domestic terrorist Bill Ayers. Friends.
The McCain campaign released this web ad today about Obama associate William Ayers.
They realize that there's sort of partisan media, there's a blogosphere that is hungry for content, and the campaigns have been the enabling girlfriends for that.
At the rate the two campaigns are putting out advertising, together they'll easily set a spending record of close to $1 billion by Election Day.
And finally tonight, new warnings about the war in Afghanistan. Judy Woodruff has that story.
Taliban and al-Qaeda attacks in Afghanistan have surged this year, and so have coalition deaths in a war that entered its 8th year this week. Since this past April, U.S. and coalition deaths in Afghanistan outnumbered coalition military deaths in Iraq. 610 U.S. troops have died in Afghanistan since the U.S.-led invasion. In the United States, Afghanistan has become a campaign issue, as both presidential candidates have called for more troops for that theater. The steady increase in violence also has raised new doubts among America's allies that the fight can be won. This week, a French diplomatic cable leaked to the French press quoted Britain's ambassador to Kabul. It read, quote, "The current situation is bad. The security situation is getting worse. So is corruption, and the government has lost all trust." He added, Afghanistan might best be governed by an acceptable dictator. The quotes were later denied by the British government. But Britain's top military commander in Afghanistan bluntly told the Sunday Times this week, "We are not going to win this war." Last week, the U.S. commander in Afghanistan, General David McKiernan, called for more troops on the ground.
We need more resources. It's not a question, though, of just military resources. It's a question of more civilian resources, more governance, more economic aid to Afghanistan, and more regional stability as well.
Over the next several months, the U.S. plans to increase its troop numbers from the current 33,000. Relations between the United States and Afghanistan have been strained in recent weeks after a U.S. military airstrike on August 22nd killed dozens of civilians.
They were children, old men, and women who were killed. There is no one among these dead who are Taliban.
The U.S. military originally reported between 5 to 7 civilians died. But yesterday, a military investigation spurred on by this amateur video confirmed 30 civilian deaths. Afghan President Hamid Karzai has said the deaths undermine his government and the international mission.
We cannot tolerate civilian casualties, not even one. Therefore, the right mechanism has to be established, foolproof, to avoid civilian casualty.
The U.S. apologized for the incident. Defense Secretary Gates, who is attending a meeting of NATO defense ministers in Budapest this week, urged allies to send extra troops.
We need a better coordinated effort between the civilian economic development and reconstruction efforts and the security efforts. We need to have the Afghans in the lead. There is, I think, broad support for expanding the Afghan army and doing that as quickly as possible.
Altogether, there are nearly 51,000 U.S. and NATO troops in Afghanistan now. NATO commanders are seeking up to 12,000 more. Today, the New York Times and other newspapers reported that the Bush administration and the intelligence community have mounted full-scale reviews of the war in Afghanistan. For more on that, we turn to New York Times reporter Mark Mazzetti. Mark, it's good to see you again. What prompted these reviews?
The situation that's bad and getting worse. The Bush administration a few weeks ago announced this sort of comprehensive review inside the National Security Council that's designed to sort of be a soup to nuts examination of the policy, what's going right, what's going wrong. At the same time, the intelligence agencies have been putting together what they call a national intelligence estimate about the situation in Afghanistan. It's in draft form, but our story today talked about how its conclusions are pretty dire. They describe a bleak situation, not only of rising violence, tremendous corruption inside the central government in Kabul, as well as the booming heroin trade that's kind of fueling this corruption. So it's a pretty bleak situation at this point.
But as you write in your report today in the Times, there's been bad news coming in for the last 2 years on Afghanistan. Why the review now?
Well, I think that the administration in its sort of twilight months is trying to right the ship before they leave office. There's been a lot of criticism inside the Bush administration that not enough attention has been paid not only to Afghanistan, but to the al-Qaeda safe haven in Pakistan, while there was so much attention paid to Iraq. There was someone I talked to who covers Afghanistan policy in the Bush administration said, you know, the only good thing about hitting rock bottom is that things start to move. And right now things are moving with this review. So there is some concern that there was some people kind of asleep at the switch.
So Mark, tell us what you found, what you've learned about what's in this intelligence report that contributes to this, as you put it, downward spiral.
Yeah, they describe Afghanistan as in a, quote, downward spiral, and beyond the violence that's been pretty well documented, the rising violence, some of it which is attributable to the safe haven in Pakistan, there is also a real indictment, I think, of the corruption inside the central government. I think that this is leading to some rethinking in the Bush administration about exactly how to not only spend U.S. money, but also to focus U.S. efforts. I think there's a lot more attention now to looking local, looking even at the tribal level, dealing with tribal leaders, possibly arming tribal militias as a way to deal or to arrest the encroachment of the Taliban. This is something they've resisted for some time. They wanted to build up central institutions, you know, the army, the police force, the central government. Now, there's a question about whether they need to look local, to look at the vast swaths of Afghanistan that are not at all governed by Mr. Karzai's government.
Well, I want to ask you about some of those fixes, but to back up just a bit, how much is this review looking at why it's gotten to this point?
Well, I think that it's a lot of it. I mean, they try to assess, you know, the reasons for the violence, the reasons for the corruption. If you look at the corruption side, there's no question that the drug trade is a large part of what's fueling this corruption at the central government and at the provincial level. There are some estimates that the drug trade basically accounts for 50% of Afghanistan's GDP right now. So that's a huge problem. In terms of the violence, there is not only the question of the al-Qaeda safe haven in Pakistan and the Taliban safe haven in Pakistan, but the Taliban has also been able to basically establish a base of sorts in parts of Afghanistan that coalition and American troops have not been able to secure and to hold. So these are some of the reasons for the situation as it is.
And how much is in what you were able to find out about the number of troops? There's been a big debate here in this country about that. What were you finding in terms of what you learned?
Well, the troop issue certainly is front and center in the United States right now. As you reported, President Bush has authorized more troops. General McKiernan says he wants more. And you also talked about how Secretary Gates has been going kind of hat in hand to European capitals asking for more troops. This is the exact same thing his predecessor, Donald Rumsfeld, did. They've been trying to get bigger European commitments of troops and money really since September 11th. there is some anger that some of those commitments that were made early after September 11th were never followed through on. So they feel like they need American troops in part because they recognize they're not going to get the commitments from Europe.
Mark, you write today that some in the CIA say they think it has taken the White House too long to address this. Tell us what you found in that regard.
We've done a lot of reporting this year about the sort of growing problem of Pakistan and the worsening violence in Afghanistan. And for several months, especially over the summer, you'd hear a tremendous frustration that this is not front and center on the agenda of the White House, that this is getting worse, and yet obviously Iraq is a big focus, and that it would take some major, possibly cataclysmic event to again shift the focus to Afghanistan and Pakistan. And we saw to some extent a shift this summer when President Bush was presented with intelligence that Afghanistan's spy service was complicit in an attack on the Indian embassy in Kabul, which I think angered the president, as well as some sort of high-profile attacks in Afghanistan and Pakistan. This pushed President Bush to authorize unilateral American strikes by special operations troops inside Pakistan. So you're seeing a shift in policy over the last month or two, but a lot of people, as I said, think that this comes a little too late.
Well, and coming back to the point you started to make a minute ago about what fixes are emerging from this. You talked about refocusing on the tribal areas. Come back to that point and help us understand that.
Well, in Afghanistan, I think there's an increasing focus on how do you protect people? How do you protect the Afghan population? If the government can't do it with the army or the police, can the tribal leaders do it? It's sort of the classic counterinsurgency doctrine. It's worked in places in Iraq. If you have people protected, they turn away from insurgents. So
have better